Hey guys, how to trade flag pattern. In this video, we'll discuss the classic price action pattern that every trader must know. We will discuss the theory first, and then I will show you a real example of a flag pattern. I will teach you how to identify that and how to read that pattern. Please don't forget to like this video and subscribe to my trading view page. Traders, let's start with the theory because trend basics is very important for understanding the flag pattern. The point is that the market never goes just like that or like that. We see the waves, the impulses that are interrupted by correctional movements. Yes, analyzing different financial markets, I guess you noticed that the market always has the so-called zigzag shape. And for example, you can see that even though euro dollar is trading in a bearish trend, after a strong bearish wave, we have the correctional movement, then we have one more strong bearish wave, then a correctional movement. It is never just straight up or down. And the point is that these correctional movements occasionally can be the patterns. Occasionally, within these correctional movements, we identify different price action patterns. So, imagine the situation that we have a strong bearish trend. The market falls like crazy and then reaches quite strong support from where buyers started to buy. We see a strong retracement first, then the market drops but doesn't manage to reach the current level and instead sets a high level. It is the indication that the correctional movement starts, and occasionally we see very harmonic movements within the channels. And such a channel is called the flag pattern. And this pattern is considered to be a bearish pattern while the market is trading within the boundaries of the impulse. So while the market is recovering within the boundaries of a major impulse, we consider that to be a correctional movement. And we will consider the trend to be violated only when the market will violate that impulse. So here we have the perfect example of a rising flag. But occasionally, once the market reaches a strong support, instead of forming the ascending channel, the market forms the horizontal channel, perfectly setting equal lows and equal highs. It is also the variation of the flag, and it signifies that the market found the fair value price, and at that exact moment, the market participants agree about current prices. And what we are looking in such a situation, we are looking for a breakout of the support of a flag because its violation signifies the willingness of sellers to push lower, and then we expect a strong trend following movement. By the way, remember that bullish breakout of the resistance of the flag in such a situation will signify the initiation of a correctional movement, and it can be a very nice signal for you to buy. In a bullish trend, the situation is very similar. Imagine we have a strong bullish impulse and the market reaches some strong resistance. We see a retracement, and then the price starts setting equal highs and equal lows, perfectly respecting the horizontal resistance and the horizontal support. Again, it is a perfect example of a bullish flag. And the signal that we are looking for right here to buy the market is a breakout, a bullish violation of its resistance. Once the market closes above that and a retest, we are looking for trend following opportunities. And at the same time, remember that bearish violation of the support of the channel is a very strong bearish clue. And most of the time, it leads to a strong bearish continuation. Now let's discuss the example. On New Zealand dollar here we have such an example. Take a look, traders. So right here, New Zealand dollar is trading in strong bearish trend. You can see that for a very long period of time the market is falling. And reaching that low, the market started a correctional movement. You can see that the price here was setting equal highs and equal lows, trading within a horizontal range. Yes, here's our range. We had quite wide resistance right here and quite narrow support. Yeah, so here we have a weird example of a flag formation. And the trigger that we will look for right here to sell the market will be bearish violation of the support of the range. Once the price closes below that, once we see the daily candle close below, it will be the signal for us to short on on a retest, expecting a bearish continuation. So for now, the breakout is not confirmed. It will be confirmed only after a candle close. Remember about that very important condition, traders. Similar situation already happened on Aussie dollar, similar to New Zealand dollar. Right here, the market was setting equal highs and high lows. Yes, and you can see that after the breakout. But here it is called the triangle. Yes, it is the trend following triangle right here. But the situation is very similar. You can see that the price here broke the support of the triangle, and its breakout triggered a further bearish continuation. So let's conclude what we discussed, traders. So flag pattern is a classic trend following pattern, right? And in a bearish trend, once the market starts a consolidation within the horizontal channel, it is the moment for us to wait for a breakout. Yes, and the trigger for us to short and to catch the next bearish wave is the breakout of its support to the downside. In a bullish trend, the situation is very similar. So once the market starts ranging, we are patiently waiting for a breakout. Yes, the violation of the resistance of the flag is a very important signal for us to buy. Let me know, traders, what pattern do you want to learn in the next video? Also, please like this video and subscribe to my trading YouTube.